Priya, I'm going to start with you in terms of what's your expectation for whatever kind of rate increase we actually see, and how do you think the market has that priced or not?
Sure. So I think the market has started to price in as you addressed. I think we're looking for 250 basis points hikes, back to back 50 basis point hikes. I think what the Fed has is this newfound urgency to get to neutral. So I think the market is pricing that in. The second question, and probably a more important question, is do they go above neutral? And this is where I think the Fed is not really talking about it. They talk about it if they need to, they will get there. Our view is that QT, so quantitative tightening, balance sheet runoff, is also going to tighten financial conditions. That's going to start in May. So we actually don't have them going above neutral. We have them getting to 2.5. The market's priced that in, and QT to start. So I think it's pretty well priced in for the Fed hiking cycle. What we're not priced in our view is the entire impact of QT. So I do think that 5-year, 10-year rate is likely to continue to rise as we get details around QT. And you know, QT does start. We're talking about $1 trillion bonds between treasuries and mortgages that the market will have to take down. I think it's very hard to price that in, especially because we don't know any of the details around QT. So as we get those details, I think the market's focus will move away from the hiking cycle more into QT.
Hey, Krishna, if Priya's right, I mean, do you want to own equities at all?
Well, so I think you own equities because Priya has the probability of being right rather than being right. So that's a nuance, and you never know with the market. So you own equities because there's substantial upside. Having said that, I think I don't think it is quite likely that we can say with a great deal of confidence that the Fed is not going to go above neutral. You know, given where inflation is today, and given what is kind of locked in already for near-term future inflation, the likelihood that it goes down meaningfully anytime soon is pretty small, and therefore they'll keep trying. And the likelihood of them being above normal just to kind of contain growth, to kind of bring inflation down, I think they may have to go above neutral. We don't know that just yet. The only way that doesn't happen is if the labor force participation, you know, those missing millions of people somehow manifest themselves in the U.S. economy. Again, we shall see on that front.
Can you throw in a little Russia, Ukraine, and this oil story into this conversation? How does that play into all of this, and what you think Jay Powell ultimately decides to do?
Well, so Powell, you know, the impact of the oil story is a temporary inflation being meaningfully higher than what it is. But I think as a good central banker,
but you just use the word. Hey, Krishna, you used the word temporary. I think there's a lot of folks who think this may not turn out to be as temporary as we might imagine. I mean, if we're having this conversation 6 months from now, I don't know if that's temporary. If it's a conversation that lasts a year from now.
Well, so yes, I think if it is going, the oil prices are going to remain at these levels for an extended period of time, clearly it won't be temporary. But for the determination of oil prices on two fronts, one is on supply and one is on demand. So supply may be constrained, but demand may crater just as a result. I think the impact of $120 oil in some of the emerging markets is going to be quite substantial, and same thing with U.S. consumption. So the supply may not go away, but I think there is a case, at least historically, there has been a really good case to be made for oil prices, these levels of oil prices being temporary.
Hey, Priya, yeah, go ahead.
But the key point is even if Powell sees through the near-term impact of inflation, I think the global growth outlook, because of its impact, at least short-term or medium-term impact on Europe and to some extent some larger emerging markets, I think that outlook is certainly not looking very good at the moment. And it's not going to turn around anytime soon.